Chinese Premier Li Keqiang said on Thursday that China will take substantial measures to reform its investment and financing systems, as well as other key areas of the economy. Premier Li delivered his government work report at the opening of the annual session of the National People's Congress, China's national legislature.
加大简政放权、放管结合的改革力度。
Li said the number of investment projects that require government reviews will be substantially reduced, and some of the project reviews will be conducted online. He said China will also greatly relax market access for private investment and encourage the use of private capital to set up equity funds. In particular, it was noted that the country will deepen reform of its railway investment and financing by making use of railway development funds. As a major attempt to transform government functions, the government promised to extend the list of items no longer required for government reviews or to be delegated to lower-level governments. It also promised to simplify the process for capital registration. Li said a national unified credit code system and a platform for sharing and exchanging information on credit will be put into place. He said reform priorities will also be given to pricing, where categories of goods and services, which are usually priced by the government, will be significantly reduced. He also said fiscal reform will focus on increasing budget transparency. As for taxation reform, efforts will be made to replace the business tax with a VAT across the board this year. Notable areas of financial reform will include promoting the establishment of private banks, building a deposit insurance system, further liberalizing interest rates, and keeping the yuan's exchange rate at an appropriate and balanced level. The premier said the country will launch the Shenzhen-Hong Kong Stock Connect on a trial basis at an appropriate time. Li said structural reform of the electricity, oil, and natural gas industries will be accelerated. In his report, the premier also mentioned reforms would be had for science, technology, education, culture, medical and health care, pensions, public institutions, and the Housing Provident Fund.